What's up, everyone? Welcome back to another episode of the Mathis Real Estate Group show. It's time for our December market update. All right, so December market update. The numbers are out. And guess what? It was a good year, right? We actually had a really strong finish to December in the Triangle market. Nothing major to freak out about. The biggest thing that we have going on right now is an inventory shortage, guys. We need houses to sell. And of course, we have the tax code that's been redone for the Raleigh or Wake County area. So you probably have some new assessments on your house. And if you're curious about those, one thing we found was talking to some of our past clients is that they had no clue how much equity their home has gained. And we'll tell you this, guys, most of the time, they don't know the prices of their homes and what it's actually worth in the open market in comparison to that tax assessment. So if you're curious about it, let's chat, we'll help you out with that. So let's dig into the numbers. So first, we're gonna start macro like we have before. So start with the Triangle. 2018, we had 2,214 new listings on the market. Fast forward to December of 2019, we saw a 4.9% increase, up to 2,323 new listings on the market. The big gain, though, is in closed sales for the month. In 2018, we were at 2,932 total sold homes across the whole Triangle. In 2019, we saw that number jump 24.8%. That's a huge increase, up to 3,659 homes. What does that do, though? Months of inventory, 2.5, which is already pretty low in 2018, actually dipped to 2. Guys, that's near flatline. What that months of inventory number means is that if we were to not list a single house right now and we stopped, we would be out of houses to sell in 2 months. Right? Think of a grocery store and them having groceries on their shelves. It's essentially them saying, we're not getting any more product brought to the store. How long would they have before they sold out of everything and had nothing left to sell? Average sales price. Again, this is a really good gain for us in our area. 2018 was right around $311,000. 2019, we saw a 2.4% increase, which brings us to $318,000. Now, days on market. This is an interesting number that we're always watching. And remember, this has been steadily climbing throughout the past year, and it's a good indicator that either there's gonna be a shift in the market or that it's gonna slow down a little bit or have a cool off. So right now, 2018, it was at 34 days on market. 2019, we popped up 14% to 39 days on the market. And now that's not a terrifying number whatsoever. I always put this in context of back in the day, it was like 160 days on the market for a regular priced home. This is also not so much anything to do with the housing market. It's not that we can't sell the houses, it's that we don't have enough houses to sell. That combined with increasing home prices is causing the market to constrict. So this isn't a situation like in 2008 where there was so much inventory on the market and no buyers. We have so many buyers on the market right now with buying power and they can't find anything to buy. So let's dial this back to Wake County. Same kind of trend in Wake County. The interesting thing here to note in the new listings numbers is that it was flat. We were at 0%, literally 1,098 listed in 2018 and 1,098 listed in 2019. That doesn't happen very often, so it's interesting to see that. Closed sales, again, big pop in this number, around 1,400 in 2018. We increased 30.8% up to 1,887 sold in 2019. Months of inventory, an 18% decrease, 18.2 to be exact. We went from 2.2 to 1.8. Again, months of inventory, we like to see between 4 and 6 months is what we call a balanced market. Anything beyond 6 months would shift into a buyer's market, where the buyers have the power because they have more inventory to choose from. Anything this low, typically it is called a seller's market. At the same time, it's also called anemic. We need houses to sell so that people can move. Days on market, again, we saw a pretty big jump here as well, 29% increase, so from 27 to 35. Now, this is big in the context of most people are accustomed to seeing homes sell in 2 days. right? You put your house on the market, lots of showings, 1 to 2 offers, sometimes as many as 10 or 15 offers, depending on the price point and location. So going from a 27 to a 35 average days on market feels like a really big hockey stick swing. And in reality, it's going back to that balanced market that we're used to seeing. So typical days on market between 30 and 60 days is healthy. And we're not anywhere near that 60-day mark right now. All right, let's drill this down to Raleigh now. So Raleigh numbers, again, we saw an actual decrease in new listings, whereas we saw an increase in Wake County and we saw an increase in the Triangle overall. We actually saw a decrease in Raleigh. So new listings were at 470 last year in December. December of 2019, we only listed 437 homes. Again, we need more inventory. You're gonna hear me sing that song for you the rest of the day. Closed sales though, here's the thing, we dropped 7% on new listings and then we went up 14% in closed sales. People are buying. If you put it on the market, you're gonna get a lot of money for it. 672 closed homes in 2018, 776 closed homes in 2019. So if you take the new listings on the market and then you take the closed sales, we actually have a 21% swing, right? So we dropped 7% in new listings, but we went up 14% in closed sales. That's a 21% swing in real estate inventory from 2018 to 2019. That is a significant indicator of a strong housing market. It's time to sell if you're thinking about it. Your equity is not going to get much higher than it is right now. Now, let's dig into months of inventory. Again, that's just, we don't even want to talk about it. 16.7% decrease year over year, 1.8 to 1.5. The beautiful number here is our average sales price. Again, we're sitting at $355,000 in December of 2019. That is a strong number. We are well ahead of the median and average sale price for the entire country. Days on market, again, we saw a hefty increase in days on market. And remember, this all goes back to the context of if you're used to selling your home or seeing your neighbor's home sell in 2 or 3 days or even a week, and then suddenly right this year we're at 31 days on market. That's a 34% increase year over year from 2018 when we were at 23 days on market. And if it's in context of your neighbor, best friend, sister, mother, whatever, if their home sold in 7 days and yours is sitting on the market for 27 days, you can feel like something's wrong with your house. It could be condition, it could be price, it could be marketing. We cover these in a lot of our other videos, and it could just be the normal market momentum shifting back to a more balanced market. So don't freak out. These numbers are important to pay attention to. A couple other interesting things that we wanted to work into the video today was percent of original list price received. Percent of original list price received. We've gone over this in other videos, and it's one of the things I like keeping an eye on because it tells us if the market is shifting downward at all and that people are starting to overprice the market or they're chasing an old market. And when that happens, that typically means you will not receive your original list price for the home. You're going to have price reductions. So this is a good number for us to keep. It's like a litmus test to see if people are actively having to shift their home prices down to chase the market that's correcting. And what we saw was, again, it was another decrease year over year, 97.6% 2018 down to 97.1%. So if you go back 2 years ago, we were at almost a 99.6% original list price received on the sale price. And we've dropped almost a full 3%. Now on a typical home, that can be anywhere from several thousand to tens of thousands of dollars depending on the price point. So that is a significant thing to keep an eye on, and make sure when you're pricing your home, you're really digging into the numbers, the comparables, and you're working with someone who knows the market at a granular level that can really help you not see the past market, but helps you look out the windshield of the triangle market and where it's going. That's something we're really good at. Our actual list price received this year is hovering right around 99.2%. So we're beating the market by about 2.6%, and that's a significant amount of money depending on the price point of your home. One other thing to note is showings. So we've always liked to look at the showing report to see how many buyers are out looking at homes. And this is where pricing gets really interesting again, because depending on your price point, you can see a dip in the number of showings on your home, and not just a little dip, a significant dip. So the average across the whole market for the entire Triangle region was around 6.6 showings before the home went under contract on average. Now, If you take the pricing groups they did, they're kind of broad groups, so it's hard to really differentiate the data a little bit. What we can tell though is that if you moved from, say, a certain price point in a certain location and you bumped it up just $5,000 to $10,000, you could cut the number of showings in half. And again, that's important because that means less eyeballs on your home, less likelihood of you getting any offers or even multiple offers on your home. So always pay attention to that when you're looking at your pricing of your house. Now, as always, guys, this is the Triangle Market report for December of 2019. We're gonna do an annual report for the entire year of 2019 and release that in the first quarter of 2020. And when you're looking at the market overall, it's healthy. It's a really strong market, strong appreciation, strong average sales price. That's another thing that we saw was Case-Shiller does their housing affordability index. And basically anything above 100 means that people can afford to buy a home. The lowest it ever dipped was in 2013, actually, in the Triangle market. It dipped down to about 104, right? So 104, which meant it was pretty skinny on affordability. And that was because rising interest rates combined with less inventory, combined with a higher sales price, drove out the affordability of our market. We actually saw that number increase the past several months. It's up to 118 right now. So houses are affordable, still a good time to buy. Interest rates are still low. So if you're thinking about buying or you're thinking about selling, we're happy to chat about it. We have 30 years of experience in this area. We know the market really, really well. As you can tell, we know our numbers just from this video. So we really pay attention to market trends that can help you project what your home will be worth a couple months down the road versus just pricing it off of what happened 6 months ago. So reach out to us on our website, mathisrealestategroup.com, or you can call or text us 919-867-1400, and we look forward to seeing you on the next market update.